The information provided on this podcast is intended to be educational and informational only and is not considered to be formal legal advice. The listener should not take or refrain from taking action based on its content. Any listener in need of legal opinion upon which to rely in decision-making should consider formally engaging an attorney to review relevant facts in detail and examine the pertinent law as it applies to those facts.
Welcome to Real Estate Milestones, where we explore fascinating topics in commercial real estate with knowledgeable industry experts. I'm your host, Ben Malik, and I'm a young real estate professional who is passionate about adding value to people's lives through the incredible power of real estate. My goal is to help you discover what the heck is going on in the industry and how you can get involved. This is Real Estate Milestones, where your future in real estate lies just around the corner.
Hello, everybody. This is Ben coming to you from New Orleans, and we got Travis Watts. He's a full-time passive investor. He has been investing in real estate since 2009 in multifamily, single-family, and vacation rentals. Travis is also the director of investor relations at Ashcroft Capital. He dedicates his time to educating others who are looking to be more hands-off in real estate, and he is the co-host of the Best Ever Real Estate Advice Show, which I highly recommend to everyone, and has tons of great information, and I'm sure we're going to get a lot of that today. So Travis, thanks for coming.
Awesome, Ben. Thanks so much for the invite. Good to connect.
Yeah, it's great. So let's start with what's your first milestone in real estate?
Man, the first milestone in real estate for me was actually with house hacking. So it was having a roommate who was effectively paying my mortgage, and that first initial toe dip into the world of real estate and cash flow, this concept that someone's handing me a check with some money and I didn't have to work for that, And so that was the first epiphany, is how do I scale a business like that? How could I get not one check for $600, but how do I get 100 checks for $600? So that was back in 2009 in a little 2-bed, 1-bath home that I bought towards the bottom of the recession.
Yeah, that's awesome. I've been thinking a lot about house hacking because, effectively you're getting, all your house expenses paid and maybe even have a little bit extra. So definitely recommend checking that out for people who want to figure out a way into real estate. Great. So as I know, you are mostly passive now. To me, it seems like you do a lot of things actively, like you're an active passive investor, but could you just touch on the difference between passive and active investing?
Sure. Yeah, that's kind of the irony of it. And that's what I co-host with Joe Fairless on the Best Ever podcast. Is I called it the Actively Passive Show. And I'm really highlighting the active components to being a passive investor, right? Because nothing truly is 100% passive, right? We all have to do some due diligence. We have to decide what we're going to invest in. We have to know why we're going to invest in that. We have to set some goals. There's some active components to it. So the way I define it is, if you're an active investor, then you have an active role in the actual business of what it is you're investing in. Okay, so if you're a syndicator in a syndication, you're a general partner, let's say, well, you're finding deals, you're underwriting deals, you're managing people's money, right? You're managing property managers, or maybe you're owning single family homes, and you're trying to do it yourself, which is what I did for many years. Is I was an active investor doing vacation rentals, doing fix and flips. These are all very hands-on and very active. I was the decision maker in all of this. Then in 2015, I made a pivot to being a passive investor. And again, what it means to me is not having an active role in the actual business plan. So instead, I'm partnering up with experienced people and experienced firms, general partners, whatever we want to call them, who are out there finding deals, underwriting them, managing them, as I described. And I'm just saying, look, I like that business plan and I like your track record and experience. Why don't I just partner up with you guys on the deal? Here's whatever, $100,000. I want to be an investor in this. And then I'm just sitting back to collect distribution checks, as we go along, in something that produces cash flow. Usually it's multifamily real estate. So you could define passive investing if you want to zoom out of real estate real quick, and you could invest in stocks that pay a dividend or something like that. It's mostly passive. Again, you have to do a little homework on how to get there and which stocks to pick. But at the end of the day, if I invest in Apple, just for example purposes, I'm not Tim Cook. I'm not an engineer. I'm not working at Apple. I'm just an investor in Apple. So I'm a passive investor to them. So that's how I see it.
Yeah, definitely. And I think that in real estate, passive investing is interesting too, because like maybe you're not Tim Cook, but like essentially if you're in a real estate syndication, you can call up Tim Cook and, talk to him and like build trust with him. And so, I mean, could you tell us a little bit about Ashcroft and how, are you passive in that business or, can you tell us a little bit more about that?
Yeah, I'm director of investor relations with Ashcroft Capital and Joe Fairless. And I've been an investor, a passive investor, a limited partner is the legal definition in their deals with Joe for a very long time. I don't know, 5.5, 6 years at this point. I've done a lot of deals with them. And so, how that came to be is that, again, kind of the quick backstory is that I was working in the oil industry, actually, at a W-2 job. I was working almost 100 hours a week. It was something I didn't enjoy. I didn't really want to do, but it paid pretty well. And I was single, no kids. And I thought, what else do I have going on? But, let's make some money, right? And I was parking all of that into real estate, doing flips and vacation rentals. Well, I burned myself out, 6 years of that. And Joe was one of the initial people I was introduced to who was in the syndication business. And, he and his team were out there doing these much larger multifamily deals quite successfully. And so I started kind of moving my capital over that direction so that I could build up passive income streams and create financial independence that way. And so what that allowed me to do first is leave the oil field job that I didn't enjoy doing. And so that's what I help educate people on is how do you build what I call FI, financial independence, through passive income. And again, it doesn't have to be syndications, doesn't have to be multifamily, whatever, but it does need to be a hands-off type of investment. And what it does is it gives you your time back, right? So that you can now take your time and go do what it is you love to do. Maybe it's work part-time, maybe it's pivot careers and do something different that excites you a little bit more time with friends, family, travel. Everybody has their why and their what. But so that's kind of, Ashcroft Capital is a multifamily syndication firm. They work with accredited investors. They're buying in the Sun Belt regions. They're buying pre-existing properties built in the 80s, 90s, 2000s. And they'll buy a property, they'll renovate it, the new branding, new signage, new curb appeal, add new amenities on the properties, redo the units, and then incrementally raise the rents in the process. And then they're looking to sell typically between maybe 3, 4, 5 years down the road or something like that. And often to an institutional buyer. So somebody out on Wall Street or an insurance company or a pension fund or something like that. And so it's a circle of life, man. It's interesting to study money and the movement of it. And we're all in it for different reasons. And a lot of these big hedge funds and mutual funds and all this kind of stuff, they have deep pockets, they have a lot of money, but they're not in the business of being so hands-on and so active, right? They don't want to go to these properties and start working on the HVAC systems and start, repairing roofs. They're just looking to park big money in something that produces cash flow. And so, it's a circle of life. We come in and fix them up. They buy them. They sit on them for 5, 10, 15 years till they start having deferred maintenance. And then they offload them and they sell them. And then, Ashcroft's just one of many groups that'll jump in and buy and start the renovation process. So that's kind of the macro level of who Ashcroft is and what we do. Yeah,
that's great. Thanks for the description. It makes a lot of sense. So, I think a lot of people have this notion that the rich get richer. And it makes sense. It seems like it repeats throughout history. But I want to know if you had any rebuttal to that or if you had any way of explaining that might offer a different perspective.
Sure. I'll pull, some sources from primarily, I guess, Robert Kiyosaki. I think he does a great job at breaking this down, author of Rich Dad, Poor Dad and founder of the Rich Dad Company. And the bottom line is that, without a diagram here to show your listeners, most poor basically have money come in and 100% of that money go right back out, right? So it's income and expenses, boom and bang, you're back to zero. And this is why it's tough to get ahead, right? It's paycheck to paycheck style of living. The middle class have, some savings rate, but unfortunately, what's missed a lot of times is that middle class will buy things that they think are assets, but in reality, they're liabilities. And so Robert Kiyosaki says that an asset is something that puts money in your pocket, whether or not you work. And then a liability is something that takes money out of your pocket. So I'll give you a good example. The most common example is buying an owner-occupied home to live in. A lot of middle class say, wow, this is my biggest asset in life. Look, I have 100K home equity over time. But the reality is you pay property tax, you pay insurance, you have to maintain the property, and then you'll have a mortgage payment. So it's just a money sucker. It's just pulling your money right out, right? A car is the same thing. You might think of it like an investment or an asset, but in reality, it's going down in value, and you have to insure it and you have to maintain it and things like that. The rich, to answer your question, are investing in real assets, whether that's stocks, bonds, mutual funds, real estate, gold, silver. They're things that are producing income and or maybe going up in value simultaneously. And then what happens is that money comes back in and they just cycle it back into more assets again. And so this is kind of that snowball or compounding effect, is when you can build more passive income streams than you need to live on, then anything above your means gets recycled into buying even more assets. And so this year you've got 10 grand, next year you've got 15, then you got 30, then you got 50, then you got 100, and it just blows up. And this is essentially how the rich get richer and why that is.
Yeah, that's all great stuff. And that's a very good explanation. And I know, one thing I've been thinking about is that if you have $1 million and you invest that into a piece of real estate that pays 8% in cash flow, that's like 80%, or that's $80,000 every year, and that's more than a lot of people's salaries. I know that's an example that you gave for why you like to invest in real estate, but could you elaborate a little bit more about why you're interested in real estate and how maybe real estate investing is different than investing in stocks?
Yeah, I started out on the real estate path, but I got so heavy into it that I thought, I don't want to be a one-trick pony here. I want to have a wider perspective. And so when I left the oil industry, the first thing I did by choice, not by obligation, is I went and I got a job or a career, whatever you want to call it, at a super large brokerage firm, because I wanted to learn stocks, bonds, and mutual funds. And I wanted to really question them. I really wanted to learn them from the inside out and, get licensed to do this stuff and learn the whole Wall Street game. And what I learned is there's a big misalignment of interest. In other words, when you work for these places, they're training you to push their products or their mutual funds, but I didn't personally believe in them. And I knew that real estate held, in my opinion, better benefits in the sense of, paying down mortgage and the tax incentives that come with it, and the yield and the cash flow seem to be higher than what a lot of these other things were paying. And then what you said earlier hit the nail on the head. Maybe I can't call up Tim Cook at Apple and say, how's it going? Tell me about your business. And, how'd that quarterly meeting go? But I can do that to a general partner of a syndication. And they're often putting a large sum of their own money in the deal with me as a limited partner. So if that ship starts going down, they're going down with it, and I see a lot more alignment of interest with that than just telling someone you should buy this mutual fund, even though I don't invest in it, but you should. So so that's kind of, the macro level to that. Did I answer your question? I got on a little rant there.
Yeah, definitely. I mean, if you could kind of speak on the difference between between speculation and then cash flow investing, that'd be pretty helpful.
Yeah, that's another thing. And, we were briefly kind of chatting about this earlier, but, there's a big difference. I made an episode on the Actively Passive show about this, but a lot of people confuse the two between speculation. And so let's look at it this way. We had what's called the lost decade from January of the year 2000 until about December 2009. So a lot of us are trained, including myself early on, that investing's all about buy low, sell high. That's investing, right? But no one really teaches cash flow and passive income. Not a lot of people, comparatively. And so what would have happened if you were an investor in January of 2000 and you said, you know what, I'm just going to buy an S&P 500 index fund. I'm just going to kind of broadly put my money out there in the market. And, historically, the stock market always goes up, blah, blah, blah. But we had the dot-com crash happen, and then we had 9/11 happen. And so the markets were down. And then we had a recovery start happening. But then we had the Great Recession and the markets were down again. And then we had a recovery, And so we all know that there's ups and downs in the market. The unfortunate thing is that buying an index fund like that is just hoping that the market just goes up. There's really no other strategy. And unfortunately, in that time frame, there was 10 years that passed with nearly a 0% return, because buying an index fund has a super low yield, maybe around 1.5%, something like that in today's world. So I decided that doesn't make a lot of sense to me. And who wants to give up a decade of investing, and then inflation's been happening the whole time? You really end up with a negative, realized return or lack of return. So I paint the same picture with real estate. And I said, okay, what if I had invested in a syndication or just a piece of real estate that I bought, and it had a very conservative cash flow that was annualized? Let's call it 6%, just to be really conservative. And it never went up. It was just 6% a year for 10 years in a row. Okay. Well, if I put $100,000 in there, right, as an investment, then I would have been getting $6,000 per year in actual realized cash flow that I could be putting in my pocket or putting back out into new investments times 10 years, right? So that would have been $60,000 I would have at least pocketed because I invested for cash flow or for passive income. And I didn't try this whole buy low, sell high, because the truth is, as much as a lot of people like to think that they know and have a crystal ball, nobody knows where the market's going. If it's up, down, or sideways, no one has been long-term predicting that stuff. So speculating is just saying, your example earlier was like Tesla. It's had this massive uptick, and that's great if you've been in it. But if you're getting in today, what's it going to do? I don't know. The NASDAQ's getting crushed. Tech stocks are losing value. But is it going to keep going down? I don't know. Is it going to jump back up and go to all-time new highs? I don't know. But if I invest in something that pays me an 8% dividend annualized, it doesn't matter to me personally whether it goes up or down or sideways, because I'm living on that cash flow, and that's real income. And so that's my message to the world is focus on passive income.
Yeah, and even better, it's tax advantaged income.
Yeah, 100%, man. The more you study real estate, I think you will see why it's a superior investment. Again, that's just my personal opinion. That's been my own, biased experience in real estate. But when you look at the leverage you can get, when you look at the tax advantages, when you look at bonus depreciation and cost segregation, and some of this may be crazy jargon to some people listening, the point is, study it, make your own decision, but it truly is a great asset class, and it's needed. We need more affordable housing in America more than ever in 2022. It is so hard to find, and it is so desperately needed. How much do we need a stock or a company like Coca-Cola? I don't know. I mean, you tell me how essential it is in your opinion, but to me, we do need affordable housing, and I think that's very important.
Yeah, that's a great point. And some of those buzzwords will be answered in future episodes. I'm hoping to have the cost seg king on at some point.
Nice.
Yeah.
Good.
So what are you looking at now in terms of investments?
So I believe in what I refer to as the 80-20 rule. You may have heard that in different contexts or examples, but 80% of what I invest in is what I know and understand best. And that happens to be multifamily real estate syndications as a limited partner. So I'm still doing that this year. And for the foreseeable future, I still think we have some room to go. We're seeing some big inflation. Generally speaking, real estate's an inflation hedge. So it goes up with inflation, if not exceeding inflation numbers. So I still think this is going to be a foreseeable future thing. 20% of my investable portfolio, we'll call it, I kind of experiment with. I do different things. And, for those that may be intrigued by cryptocurrencies or different, coins or whatever, this is kind of where I play. If I were to play in that space, that's where I would allocate it. Or even stuff like self-storage, mobile home parks, things that are kind of in the same, family of what I do, but I'm not an expert in it. And so I may just place some capital there. So that's how my 2022 and probably 2023 looks. I don't look too far ahead, but at least the next couple of years.
Yeah, that's awesome. I like that. And yeah, I think it's cool because learning about things from podcasts is one thing, and then like doing it and like seeing how it works is also like very powerful. I like to learn through experience. So yeah, I think that's cool that you have 20% for I'd say maybe you could say learning or experimenting. It's interesting.
Well, for the same reasons I pointed out earlier, that I didn't want to be a one-trick pony and just only know real estate, and that's why I went to go work for a brokerage firm. This is the same concept. That 20% allows me to learn new things, and if one day multifamily stops making sense for whatever reason, it gets super overvalued and ridiculous and the returns go away, I need to have a backup plan. I don't want to be, I guess I'll just sit on the sidelines now for a decade and wait till it makes sense again. It may never make sense again. So that's where I get, my backup plans over there. I see what did well and what didn't, and what I might be able to repeat successfully.
Yeah, that's really cool. I like that a lot. And so before we go into our lightning round, could you give us your most recent milestone in real estate?
The most recent was just realizing my highest and best potential was not being active in real estate. And that doesn't mean for anybody listening that it's not a right choice for you. It's just, I didn't enjoy managing tenants. I'm not a handyman. I didn't have really great connections in the industry. I wasn't able to find amazing deals that were off market, blah, blah, blah. And so I was just kind of going through the motions in a good uptrending market. And quite frankly, the market was helping me as much, if not more, than what I was actually doing when I was doing fix and flips. And so you got to remember that, again, markets go up and they go down. And so if you're going to be a full-time fix and flipper, that may work today. And in 5 years, you might be crushed and out of business because we're in a declining market for 3 years and you just can't make the numbers make sense. So that happened for me in 2015. I said, hey, man, if you can't beat them, join them. I want to be a limited partner, and I want to find these groups that are just crushing it professionally and just partner up with them.
Yeah, that's cool. I started thinking it's like maybe in a recession, you could be like destroyer and flipper, like take apart houses and then sell them for less. But no, I don't think that works nearly as well.
I'm of the philosophy and opinion, there's always a deal to be had, but I tell you, it gets a lot harder to do a strategy like that. The same with buy low, sell high, right? If you're just going to, invest in the stock market generally, but we're seeing a huge decline in the market, that strategy doesn't work too well, and it sucks to sit on the sidelines and wait because you don't know. You might today be at the bottom of a correction and now it starts going up tomorrow, or it might go down 40 more percent. So it's just a hard strategy. Some strategies are hard to do, but when you invest for cash flow, you can run the numbers today and say, well, for the last 30 years, this property's produced, $500K a year in cash flow. Realistically, we'll be in that ballpark. And so price can be a little bit secondary.
Yeah, that's a good point. I guess I just thought of one more thing. Do you have an opinion on investing in REITs passively versus, syndications?
Yeah, so there's pros and cons. So like syndications are an illiquid investment, first of all, meaning if I go put $100K into a deal and then a year later I need that money back, I usually can't get the money back. It's been spent. It became part of a down payment and a rehab budget, and that money's gone. So that's a con to doing what I do. And a pro to the publicly traded markets, to answer your question about REITs, is they are liquid. I can put $100K in today and then tomorrow go, just kidding, I want that money back. And I can pull it right back into my bank account. That's a beautiful thing. The biggest con to me about the publicly traded markets is that they're so volatile, as we've seen this year, especially in January 2022, up and down, 3%, down 4%. Some of these REITs are getting crushed. And for no hold, they're still performing. You know what I mean? Like your real estate doesn't actually go up and down 4 and 5% per day if your tenants keep paying the rent. You know what I mean? They're there. So sometimes when you just blindly invest and say, yeah, I'm just going to go buy a handful of REITs, you might be overpaying more than you think. If you know how to look at the spreadsheets, the fundamentals, the PE ratios, you may, you got to simplify it to reality. And an average home's $400K, you may be paying $800K per home if you're buying it inside of a REIT, because the market's artificially high at this time. And so I think if people saw it that way and realized that, there would be far less, when we're kind of up in the bubble territory of the markets, there'd be far less investing going on. But anyway, that's, not to go down a rabbit hole on it. There's pros and cons. So real quick, March of 2020, the market's corrected about 30% on average. That was a great time to buy REITs, by the way. Some of these REITs got crushed like 30, 40%. And again, nothing really changed fundamentally from their collections and their occupancy. So you are literally getting 30, 40% off on an investment. And that was tremendous. But trying to time that's pretty difficult. So if you see the opportunity, it may be a good one, but not financial advice.
Yeah. That's all very good points. Very interesting. And I think one trend nowadays is the tokenization of real estate, which might merge the liquidity aspect into the syndication business, which I think it's definitely worth learning about and thinking about, because it's the implications are pretty cool.
Absolutely, 100%. I'm happy that we're here technology-wise to be able to do something like that. It could make even a better asset class.
Yeah, and have access to people who are not accredited investors necessarily, who might not want to, or might not have, if $10,000 is could be all of your extra money versus 1%, and it's so you could put 1% of your money and it'd be proportionally the same thing as someone who had $10,000, which was 1% of their portfolio, if you know what I'm saying.
Yeah, exactly. Yeah. And I'm all about that. I mean, there's obviously reasons why these laws exist and why certain people have to be accredited to do certain deals. I'm not going to argue those points, but I am all for everybody having equal opportunity to participate in investments, right? If they know and understand the risks, I just hate that so many people are passionate about this stuff, but they just can't get involved. So hopefully we head that direction.
Yeah, that's part of what we're trying to do on our podcast, help people, accomplish this. So it's great stuff.
Awesome.
So lightning round. Let's start with, if you could have any superpower, what would it be?
I've always been intrigued. There's been some movies made about this where you could download information to your brain, basically, so instead of Audible and these kinds of things where you can get an audio book and sit there and listen, what if you could pay $20, hook up this little microchip, and then boop, now the book's in my brain just instantly. Now I know everything that book said and I can maintain and remember it. We get obviously so smart and so advanced so fast. And I'm an avid reader and educator. And so that would be amazing. So that'd be mine.
Well, that's a good one. I'm also an avid reader. And I'm thinking about The Matrix. I was having a conversation with my friends today, actually. But yeah, doing that, upload the fighting skills. That was awesome. Yeah, that'd be cool. That's a good one. So on that note, I guess, what's your favorite book, or what's the one that's helped you the most?
Yeah. So I read a lot of, practical books on the subject that I do. So I don't want to say I've read every real estate book, but I've read a ton of real estate books. But also, I'm a big believer nowadays, you need to kind of blend it up a little bit too. So I read books by Tony Robbins for kind of that motivational or that, setting goals kind of stuff, So Unleash the Power Within was probably one of my favorites. I've read 3 or 4 times over the years. And it's kind of like when you hit a plateau, right? Because learning is not just a linear curve straight up, right? Sometimes you hit a nice step up and then you hit a plateau for a while. And so when I'm kind of stuck in that plateau, what do I do next? How do I expand from here? Those are great books to pull out and to read.
Yeah, that's great advice. So what motivates you to continue doing what you do every day?
Helping people. So yes, I do, the best ever stuff in the podcasting and the Ashcroft Capital stuff. But at the end of the day, I'm an investor and I found real estate to be extremely powerful in my life. It's been literally life-changing, and not just to me and my family, but a lot of people that are in my network and that I've been able to help. And so getting those responses back, getting emails from people, going to events, you're just out in LA and just hearing people, hey man, I was listening to you 3 years ago. didn't know anything about multifamily. Now I've done 20 deals and, I couldn't be happier. I just sold my dental practice. Now I'm going to be able to retire, blah, blah. I love that stuff, man. That's literally what I thrive on. And I'll tell you, it's a numbers game. You talk to 100 people, you might get 3 or 4 that really have that kind of story, but it's those 3 or 4 that keep me going.
Yeah, that's awesome. And I think real estate is one of the best ways to add value to people, within, helping people with their financial literacy and, like, I guess their dreams of financial freedom. And then also like providing high quality housing to people and, creating an environment where people want to live. And that's what I love. I love adding value to people. And that's what I'm doing here. And that's what I hope to do with the rest of my life. So that's great. So
I love it.
What advice would you give to someone who wants to follow in your footsteps?
Yeah, well, first realize or decide, I should say, for yourself whether you want to be active or passive, because there are pros and cons. And I speak out a lot about this. Not everyone's cut out to be a passive investor, especially if you're first starting out with very limited amount of capital. Because you think about it, if you had, I don't know what, $10,000 to start with, right? Do you really want to be a passive investor? You'll put that to work at 8%, and you're making, nothing basically per month in passive income. So if that's not going to be motivating to you, then don't do that. Take your 10 and try to turn it into 50 and try to turn the 50 into 100. And when you start getting up to, a few $100,000, now you might start thinking about being a passive investor, because now all of a sudden you might be able to bring $3,000, $4,000, $5,000, $6,000 to the door every month without having to work. And that becomes a game changer for life. And back to your how the rich get richer, that's the formula, man. So the formula I've used is earn at your highest and best potential, live below your means for a period of time, invest in something, whether it's cash flow or equity or both, and then, avoid bad debt. Don't try to keep up with the Joneses and, forget what other people have, and aspire just for happiness and fulfillment in your life. And so those 4 steps got me to, the financial independence. And it's easier said than done, but it's worthwhile and it can happen sooner than you think.
Yeah, that's awesome. That's really inspiring to me, who's trying to, follow this path to financial freedom. So I love it. All right. So last question, I guess, is since I put you on the spot, I'm going to give you a chance for revenge. So feel free to ask me anything you'd like to know about me.
That's awesome. Well, this is okay. So I'm a big believer in reverse engineering, right? So you got to look at 5-10 years down the road and kind of what it is you're trying to accomplish, and then what can help you get there. So what path are you on? I mean, if you think about yourself in 10 years, is it a lifestyle that you're trying to build? Is it a financial number that you're trying to hit? Is it how many people you're trying to help? What's your 10-year plan?
Totally. So by 10-year plan, well, I know, okay, so my number is by 27, I want $10,000 of cash flow per month.
Okay.
I think that would be a good place to allow me the flexibility and freedom in my life that I want, and cover the expenses, and, give me a nest egg to be able to start a family, or, have the freedom to, pursue the rest of my life. So I think that's a good place to start. And I mean, in terms of getting there, all I do is invest in my education. So I'm like, for jobs I'm looking for the places where I learn the most about real estate and about the things I like. I'm working in lending or multifamily lending in New York at Lumen this summer. And I think that's like going to help me with my network in this field that I love so much, and learn the financial side of things. And so I, at this point, I'm not sure if I'm going to get there fully passively, or if I'm going to eventually be active. I think down the line, I will be doing my own deals, but I definitely want to learn as much as I can about real estate, and then, benefit from the awesome advantages of being an investor in real estate.
I love it, man. They're noble goals, and they're, in my opinion, achievable goals. And I'm sure that you'll be there. And anybody listening, including yourself, Ben, if you set number goals like that, 10,000 a month passive income, what I encourage you to do is what, and I forget where I learned this, but it's called the 3 whys. So why do you want the 10,000 a month? I know you named a few, but get as detailed as you can and ask yourself why. Okay, I want 10,000 a month income. Why? To do A, B, and C. Why? Because of blah, blah, blah. Why? If you can successfully ask why 3 times in a row and get to the bottom of it, your probability and likelihood of actually achieving that just skyrockets to the roof. And the mistake I see people make is they say, well, I want $1 million. That's my goal. And they can't answer the why 3 times. And then what happens is a recession hits and they were making progress, 100K, 200K, 300K. Now it goes back to 150. They give up. They go, well, I don't really need $1 million. I'll just settle for like 500K. That'd be all right. And so they just give up. And so don't be that guy and ask yourself why.
Yeah, that's a good point. And I guess just to, build on that, one of my whys is that my mom and my dad are both very hardworking people who, have taught me a lot about, have led me to have this work ethic where I want to, add value to people and I want to work hard and, create financial freedom. But I mean, they work very hard and they're not having the advantage of real estate in terms of taxes and, flexibility of their time. And like part of my why is, helping them with, or maybe I want to put together a deal where I can start getting them into, the passive cash flow and starting to feel like, yeah, they're working for their freedom. So we can go on vacations, but if you only do it 2 weeks of the year, that's not quite as much freedom as I want for my family and for the people around me. So that's a lot of what motivates me to try to find real estate deals and, want to go down this path of real estate.
I love that you've already got goals tied to other people, and that's hugely important. Again, most people don't get there until they've fulfilled their own goals, right? It's for generally speaking, it's me, I. Okay, now I'm a millionaire. Now I'm going to start thinking about giving back and other people. But it's so cool to listen to you talk about stuff like that, because to help people is truly the most fulfilling thing. You could set a goal for yourself to be a billionaire, and if you made it, it's going to be cool, but I guarantee you'll be unfulfilled if you didn't help anyone along the way.
Yeah, that's a great point. And I mean, this has been an awesome episode packed with so much great knowledge. I'm super excited for everyone to listen to this. So how can our audience find you and learn more about you, Travis?
JoeFairless.com, AshcroftCapital.com, the Actively Passive Show. If you type that into YouTube, Google search Travis Watts Podcast. There's a lot of ways you can reach out. I'm on LinkedIn. I'm on Bigger Pockets. I'm on Instagram. So I'm always here to be a resource for anybody in the industry, accredited, non-accredited, syndication, whatever you want to talk about. I do 15-minute calls with people for free every week with no agenda, no upsell. I don't sell books, training programs, mentoring. I'm just here to try to help. So reach out, whatever outlet makes sense to anybody listening. Happy to connect.
Great. Well, recommend you guys do that for sure. Travis, this has been a great pleasure. And I thank you very much for joining us. And everyone who's listening, I hope you guys have great success in achieving your next milestone.
Thanks, Ben. Thanks, everybody.
Thanks. Bye-bye.
If you enjoyed today's episode, please drop a like or leave a rating and review. And don't forget to follow or subscribe for more awesome content. Thanks.